Hi, my name is Roger Schluter. This video is actually about loan approval, and it's really why your loan approval may not be a loan approval. And I know that sounds kind of weird. It sounds kind of like, really? I mean, how can that be? A lot of times they're putting this in a letter, so you would think anybody putting something in writing. But I'm telling you, there's a lot of ways out of this. Um, Borrowers always ask the bank for a loan approval, or as the bank would say, a loan commitment letter. This is basically a pre-qualification letter that states that the bank will finance the loan and gives the terms of that approval. These commitment or approval letters can be one page, but most can be anywhere from one page to 10 to 20 pages. The longer the loan approval letter is, the more ways the bank can usually get out of the commitment. And many attorneys have told us this. If the loan is a very short, if it's a couple sentences, this bank will give this amount of loan to this borrower, for so many months or years, at this interest rate, and signs it and date it. It'd be hard to get out of that. But most of the commitment letters, they have a lot more in them. I do know that SBA commitment letters are usually 1 to 2 pages. The letter will state that the bank is willing to lend to the borrower funds for a specific purpose, and then the letter will state the borrower's name and also will state the terms of the loan. So anyway, this is the SBA one, the loan amount, the term or length of the term in months or years, the interest rate, the collateral for the loan, and the guarantors of the loan. The SBA letter will also state a number of things that will not be allowed in the loan, such as, and this is just SBA, no future advances, loan not to be cross-collateralized, no early call feature, not be payable on demand unless the loan is in default. Most attorneys will basically tell you that the best and most binding loan approval letters to the borrower, loan approval letters will be very short and will cover the loan terms that are signed by the banker and dated. They will usually have a place for the borrower to acknowledge these terms with a signature and date. On the contrary, most attorneys will also tell you that the very long commitment or approval letters will cover so many conditions that the lender will have many ways to get out of the loan commitment or loan approval. The item that can give the borrower a way out of the loan, or give the bank a way out of the loan, is the appraisal condition. This requirement states that the value of the property or asset that is being financed must meet or exceed the value of the appraisal in order to meet the lender's approval. So if it doesn't meet that and it's just a few dollars off, the bank can say, we're not going to accept it. We're done. We're not going to do this loan. And so anyway, most conditions and requirements cover many things beside the appraisal. Some of the conditions or requirements are given here, but they can have so many that they're impossible to list them all. Items that can be on the loan commitment or loan approval are prepayment, whether it is allowed or not, late charges, what they will be, financial statements, what will be required, and there can be much more than you have provided. Legal entity documents, you'll have to obtain all legal documents. More things are environmental analysis, what will be needed, title insurance and property insurance needed. Sometimes the bank will ask for life insurance on the borrower. Financial covenants, there are these financial covenants, it's kind of hard to understand, but they're financial requirements that are to be met by the borrower. Like, most of them are ratios that can be met, or things like the borrower must occupy the property, etc. Some of the ratios are maybe that the borrower may have to have a certain amount of cash on his balance sheet at all times. Sometimes it's a equity requirement. The borrower must have a certain debt to equity, at all times. And they're only going to check. They're only going to check at the end of the year, or if they do interim statements. So normally, if they're getting annual statements from you and they're not getting interim, or they're not getting quarterly, then you just got to make sure you meet these commitments when you do those final statements, the yearly statements, or if you're giving them quarterly or semi-annual, you got to make sure that they meet it when you give them the financial statement. So anyway, there's ways you can kind of get around that a little bit. So anyway, some other things that would be on there would be closing costs and expenses that the borrower would be liable for. Response deadline. Usually the borrower must sign and date the approval letter by a certain date. And if you didn't sign it by that date and return it to him, he could say, you didn't sign it, you didn't get it to me by this time, I don't want to do the loan. So anyway, there is a myriad, that's a big word for me, of additional terms that can be put on here. So anyway, sometimes the bank will put in subjective terms, like the appraisal has to be acceptable to the bank, or that the financial condition of the borrower must be acceptable to the bank, etc. So anyway, there's a lot of ways that they can get out of it. And then too, like I said before, with an attorney, they say the shorter the loan approval letter, the better. The really long ones have a lot of things in there where the bank can get out of it. Anyway, putting it that way, I mean, most banks will honor any verbal approval that they may give, and most bankers will definitely honor any written approval. But sometimes things of the environment can change at the bank, that the bank is unwilling to honor its commitments. And that could be interest changes at the bank or nationally. Could be changes in the lending environment that make that loan less desirable for the lender. Either generally or in that specific niche, or be in that specific industry. That could be another reason. If that industry is having problems and the bank says, I really don't want to do this loan in that industry right now. Anyway, I worked for a bank, and they used to say, when the borrower signs the loan documents, he or she will have the loan commitment or loan approval. And that was kind of hard to tell borrowers. The bank really did not give loan commitment or approval letters unless they absolutely had to. Now, some large borrowers may say, hey, I got to have a letter, absolutely. And then we would have some that would say, and they'd go over your letter, or sometimes they'd even go over the lender's documents and start having an attorney go over and change things in there. So anyway, loan approval letters are great, and it's good to have that loan commitment. But I tell you, you have to take it with a grain of salt sometimes, especially if those are pretty long loan approval letters or long loan commitment letters. So anyway, thank you very much. I appreciate it. And if you would subscribe, it'd be great. And if you do hit the bell notification so you'll know when I put out future videos. And then too, if you like anything on the video, I hope you hit the like button. That does help the channel. And thank you very much. And this channel is really about business loans, and it's also about business, different types of business tips and things like that. So really, if you're in business, you'll like this channel. It's really good, and it does give you a lot of things. And I will say, absolutely, anything I put out on any of these is absolutely honest and absolutely reliable. And I've watched some of the other channels, and sometimes they are not reliable. So anyway, thank you very much. My name is Roger Schlueter, and I will see you in the next video.